The Dow is breaking out to a new all-time high today as confidence in the U.S. starts to improve and political risk concerns ease following the Comey testimony and heading into the Fed meeting. It's been a busy week for U.S. news, but most importantly, it's been a big week for developments on the political side. Early in the week, we saw gold spike up to begin the month of June on speculation that perhaps the Comey testimony or other issues swirling around the Trump administration could distract the administration, could distract Congress away from the reform agenda, and potentially people were worried that that Comey's testimony might spark a move towards trying to impeach President Trump. That ended up not being the case. Comey's testimony came out. There was nothing really new. There were no real smoking guns or triggers to suggest that that Congress would anyway consider trying to impeach Trump at this point. And then that's important because it moves towards an impeachment might sound interesting in the media, but the truth and for politics, but people need to be careful what they wish for. The move to impeach Nixon that led to his resignation sent the market down 40%. The move to impeach Clinton took the market down 20%. The markets in the U.S. economy don't like impeachment, so Comey basically not giving anybody any reason to pursue that was seen as a positive by the markets. What have we got? New all-time high for the Dow, and look at this. We had a rally in the Dow up to the 1st of March. We've been going through a consolidation phase. Ascending triangle forming indicated renewed accumulation. Now look at this breakout over 21,140, retesting it, and now we're launching up off of it. That is classic accumulation, very strong action in the Dow. On top of that, we're getting good confirmation from the RSI, and it's not overbought yet. Upward momentum picking up. This looks like a new up leg starting. Meanwhile, in gold, we're starting to see a pullback. Some of these short-term political risks are starting to ease a little bit. Because here's something else that's important. While we've seen all the focus on Comey, it's almost like a sideshow or smoke and mirrors. Because while all this was going on, the Senate was quietly gutting the Dodd-Frank banking regulations. This was one of President Trump's big campaign promises that he was going to ease regulations, and this was a big move towards that quietly happening on the same day while everybody else was focused elsewhere. On top of that, there's been a lot of talk that the Senate's been working away in the background on healthcare reform. A vote on that could go down before the end of this month, before the summer break. So things are quietly getting done while the focus has been elsewhere. And that's something important, and I think the street is picking up on this as well, that the reform agenda is quietly starting to move its way through. So gold, easing political risk in the United States, we're seeing gold tumble back. UK election out of the way, seeing gold tumble back. Now, I think this is just a correction because there's still a lot of potential for political risks later in the summer. There's the German election. There may or may not be an election in Italy. Spain's Catalan region is trying to call for an independence vote for the 1st of October. There's a budget battle, potential government shutdown September, October. Lots of stuff going on. So gold probably in a correction, could take it back here. 50-day average in and around 1258, 200-day average closer to 1240. 42, and so we could see a pullback in gold, but longer term this underlying uptrend may yet remain intact for gold. The other thing to keep an eye on here, U.S. dollar. There had been a lot of concerns that if we saw this political turmoil in the U.S. that could slow the U.S. economy or could cause the Fed to rethink raising interest rates this week. In fact, and it's interesting because when we look at March, the last time the Fed raised rates, the dollar index was up about 102. Now we're heading into a Fed rate hike and the dollar index is down around 97. So what does that mean? Well, the Fed's been talking 3 rate hikes this year. Because of the upcoming budget battle, they're probably not going to be able to raise rates or do anything in September. So if they're going to hit 3 rate hikes this year, they've got to go now. That's going to keep the Fed focused, and that's why we're still likely to see an interest rate increase this week. However, a lot of people were thinking, could we get a dovish hold where the Fed raises rates but then kind of says, well, we're probably going to pause for a while, and they will because they probably won't raise rates in September. But a drop from 102 to 97 has probably already priced that in. And if anything, post-Comey, we're actually seeing the dollar start to creep back up as some of this noise about trying to impeach Trump or other such things is starting to go away. we're actually seeing confidence in the U.S. Dollar and confidence in the U.S. economy starting to come back. So we're heading into the Fed. It's a big week for trading there, and we could see a lot of action across a number of markets.